And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott update for the NASDAQ 100 for Wednesday, June 16th, 2021. The market really kicked up the notches today, even though it was thin, light volume, but there were a couple of really strong moments, both of which were to the downside, and the third being the first two, I should say, to the downside, and the third being a pretty kick-butt rally. Okay, let's start. You can see I've already now made some adjustments because all of this movement today really kind of screwed up the very, very near-term chart. And so now I got to back it up. And that's how you basically make adjustments. It does not change the trend. It's going to allow for additional upside and continue and fit what this nasty little punch in the jaw was today to the market. To a trader, it was a dream. To a lot of others, it was a nightmare. But here we go. By moving this up here, it cleans up a lot of the doubts that I had and all of this garbage that we've been kind of like trading ourselves through, and pulls it up to a little bit larger level that's going to help us make head or tails out of this. And let me go down just to the 4 hour. And because as we can see on a minor degree, we're done with 3, we're done with 4, and we're in 5. And so I was having some problems thinking to myself, okay, what can we be going, what could be going on, or what are we doing? And because I had put in my fibs, my extensions for the upside, but then the market was kind of getting real lazy and just not really doing it, but still has a pretty good angle. And this again is a 4 hour chart. But I had the 3 down here, which left this as all a part of 5. And it was like, this is just too sloppy. And so I rethought it. And I have put 1, 2, and then put 3, I believe up in here somewhere, and then a 4 and a 5. And so I let it go at that and put 3 here, and the 4 actually at this low. Now I'm going to go today's low. Now I get back down to that hourly. That's where I put the 4. That would suggest we're in a 5th wave up. Finally, back in that final 5 up. Now, if indeed that's the case, we're going to back down to the 15-minute chart. We're going to open it up a little bit here so that we can see what's going on. I still have all of our highs and lows. If this now has completed that small 4th wave, then what we have going on is this very nice wave 1 up and a wave 2 down. Wave 2 could still be in progress. So the first thing I'm going to put up is the wave 2 retracements. And that would be from that low to that high, because you're going to have to remember all this to make it all fit. Okay. So right now, the NASDAQ has come down to the 50% level. Common place to stop. So if they walk in and they start buying it and they get it up above these levels, I would think, yeah, okay, we're done. And now we're heading up in a wave 3. And it would be a third of a third. Oh, no, just a wave 3, which I would suspect is going to subdivide it to its own 5 waves. So, but in any case, we have to allow for it to drop down to 13,906. Give it that extra 3/4 of a point down to 906. And that should hold because that's actually one of the very common. But wave 2 can come all the way down to 13,820, 830, let's say. What it can't do is break below that low. Then it's not a wave 2 because it's no longer just correcting wave 1. It's going further. So that's how far we have to allow it to go before we can definitely negate upside. So that could be a lot, right? We have to let it go another 100 points, but they may do it for us. So, I figure we got to go to sleep and get up tomorrow and do it all again. So if indeed it's that, then I would, wherever it ends up, like if it ends up back down here, how it launched off of that, that's how I would suspect it needs to launch again. And this time, not stop, just keep on going. Okay, now let's talk that this was the high, right? I'm going to go back out to the 4-hour chart. If this was, let me go out to the 1-hour chart so I can see it, kids. If this was the high, this is not a 3, but it's a 5 and a 5 and a 5 and a 3, okay? Then what we've just now seen is wave, and we're now looking for an initial 5 waves down on this hourly chart. 1, 2, wave 1 of 3. And why do I say that? Because of the height of this rally off of that low. So if this is not a complete, then this, if this doesn't complete the whole thing, then this could be wave 1 and this could be wave 2. And if that's the case, let's get rid of those. And the first set of extensions that I'm going to put down are, we'd be looking for a third wave related to that first wave, right? Let's go up to there. Okay, so it's already just the initial zip down. It already blasted through everything and finally stopped at 1.705% of wave A, of this first wave. So it moved 170, almost 171% more than wave 1. Third waves can do that, no doubt. But we're talking like it's gonna, if it comes all the way down to that again, well, then we're into these levels, and I don't think then it's a corrective. Then I'm more willing to say that, yep, that's the high. So we're not going to go back, and we were exceeding. So what else could it be? If we're in a first 5 waves down to begin to form that larger ABC structure of a primary 4th wave correction. Now that would be remembering this is that high. So what do we do? So if this is 1, 2, 1, 2, 3, it could be wave 1 of 3, wave 2 of 3, and now what we've started to go back down on is wave 3 of 3. Now, let's put up our next level. Let's see if I can open that up a little bit so I can see it much nicer. Because now we're going to put them in here to that low. And that's the one. To that high. That's the one. Okay. And a little bit short. Now we have much more room to the downside without smashing anything. But you're beginning to see, it's going to squeeze it. The 100%, which is that this wave would be, or excuse me, this decline would be 100% the length of that wave. But we're in a 3 of 3, 3 of 3. So that I don't think is going to work. That might, that's where I think it could go. Because in relationship, wave 1 of 3, 2 of 3, the 3 of 3 should come in at 162% the length of that first wave. Or more. Now, what could fuel that? It did feel a little bit like they were just like, hit the button and get me out. That's what people, I think, were doing. It's like that they were long X amount of deltas and they just sold that amount of deltas right away just to get flat because who knows what's going on. And I suspect we'll see a lot of that because don't forget where we're moving into. We're moving into, well, tomorrow's Thursday, then Friday is quadruple witching. Okay, so either it's going to be an absolute flat line, nothing day, because everybody's going to hold it right where it is and pray, or it's going to be wild, woolly, and moving and all over the place and sudden and just crazy. So I suspect the latter. So if this is 1, 2 of 3, and we're falling in a 3 of 3, these should be broken fairly easily. Okay, this is a 15-minute chart. You pay attention, please, please, please pay attention to your moving averages. Your moving averages will line up. And when they truly, like this is kind of messy spaghetti. Look at this. Here's the 200-day. This is on the hourly. The 200 days down here. The 50 is way up here. The 20. So these are lined up, right? The 4, the 8, the 20, the 50, and there's a 200. Well, 200, I'm like, oh, I don't know. It takes me a while. But look, here, starting to fall into place. 200, 50, 20, 8, 4. 200, 50, 20, 8, 4. So I think I can go to the 15-minute chart and it might tell me the same thing. Yeah, falling into place to go down. Okay, so let's see that. Falling into place to go down. And if that sticks, that's a big key. Don't ignore it. Let your combination of what possibly could be happening. Here's the 5-minute, the 200, the 50, the 20. They're lining up. They're getting there. These are getting there. Okay? So they all kind of catch up and they start. And then these remain flat while everything fights and battles. And then once it's been determined, it'll start to slope. It'll start to slope. It'll start to slope. So this is lining up. And so I think that we need to be careful. If it is this, those will really line up and it'll continue to build. So you're going to be able to see the intensity of that selling. If you start seeing everything in alignment on your 15-minute chart, and your 30-minute chart, and then eventually on your hourly chart, if you get it out to there, it's like, please do not get in the way. You're going to have kick-ass rallies, but you're also going to have kick-butt declines. So you have to really be on your toes. But if you are, and you can stay focused, don't get interrupted, boom. These are the days that you have to participate. Because if you don't, you're going to hate it. And I'm going to leave it there. So we've got our upside marching orders, and we know what it's got to do to maintain that upside. And we know what can happen first. And that move down, if it's going to get down here, happens first, it still could be either one. Okay, so the first 100, we're just going to trade what's in front of us without any expectations and pay attention to our levels and pay attention to our moving averages. That'll help us. When it starts to break, if it does below that level, that's one thing. If it starts to rally and the rally just gets intensive, you're always going to trade what's in front of you. So you're not going to build a short and try to think that it's going to go back down. No, don't do that. Okay, I'm going on too long. I'm going to leave it there. Next update, Thursday, 17th.